please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good afternoon. Welcome to Halftime Report. 12 noon, halfway through the trading session. A bit of a recovery from the lows. So the Nifty is recovered nearly 45 points from the lows. The mid-cap index is now down close to about 0.3%, but at least it's not underperforming. The mid-caps have been underperforming the benchmark indices for the last so many days. But today, with this intraday recovery, at least that hasn't happened. Though the advanced decline ratio continues to be quite weak. 2 stocks in the green for 5 in the red. Hi, Nigel.
Well, Rima, we have recovered from the low point of the day, but very quickly that as well got sold into actually, because we're still down close to around 60 points. We had pulled back to a cut of around 40 points odd. One eye on Karnataka, the other eye on all the macros that are playing out, the Indian rupee, the bond yields as well. We'll have to keep an eye out on both those two. The rupee was weaker in early morning trade. It pulled back a tad bit in the last hour or so. It's getting knocked out today is Reliance Communications. So let's start off our movers and shakers segment with just that stock. Rima.
Well, down 17% as we speak right now. It's down 71% in 2018. It's now heading perhaps to be a single digit in terms of its price. The news is NCLT has admitted an insolvency plea against the company yesterday. Ericsson had filed for it way back in September of 2017, but that finally got admitted yesterday. The key reason being that Arcom has not paid Ericsson its dues to the tune of 1,150 crore. What is the implication? Negative for banks and negative for the equity shareholders. Negative for banks because their recovery from Reliance Communications asset sale will now get stalled. Arcom and Reliance Jio had entered into an agreement. Arcom wanted to sell its towers, fiber, spectrum to Reliance Jio and get about $3 billion, which would have gone to lenders, the secured lenders, which are basically your banks and not the operational creditors, which is Ericsson, which is why Ericsson was against this deal. Now, under IBC, the resolution, once it goes into IBC, the resolution professional will have to invite bids from everyone, not just Reliance Jio, and that would take its own time. So in the immediate term, banks' recovery will get hit. Also negative for equity shareholders because as we've seen in the case of so many others, equity shareholders usually get squeezed. The equity value for companies under insolvency usually comes down quite significantly. So negative for banks because recovery gets held up and negative for equity shareholders. But numbers for DB Corp and Nigel prima facie, it looks like an operational miss.
Yeah, I think on the top line, in fact, it's looking in line. But I think on the EBITDA number, the operating profit number was much lower than what our poll threw up. So that should come up for you. Yes, it's coming at around 57 crores. That compares with around 68 crores. So we'll have to keep an eye out on that front. I think the other expenditure has suddenly seen a bit of a spike over there. So that could be one reason why, in fact, we are seeing the operational miss on those set of numbers. Top line is more or less in line. Circulation revenue growth of around 8.5%. Stock saw a bit of a downtick, but it's recovered a tad bit from the low point of the day. The net profit as well has missed our estimates by close to around 10-11 crores approximately on the expectations of around 68 crores. But let's move on then. Ekta's with us. Ekta, tell us about Lupin, the conference call takeaways.
Well, at least the street seems to be optimistic, and in any case, Lupin has corrected quite a fair bit. So maybe the valuations are looking a bit lucrative as well. But if you get a couple of takeaways from the conference call or the analyst meet that took place yesterday, the company has said that FY19 sales growth guidance is for single digits. So it is expected to be a lackluster FY19, but they're expecting traction in FY20. In FY19, the EBITDA margin guidance is also 19 to 21%. They have undertaken cost-cutting initiatives. Plus, they are looking at the US portfolio very closely in terms of any sort of further rationalization. They are going to request with the US FTA for a meeting on Goa as well as the Pithampur warning letter, which they received on these two facilities, probably in June. They have mentioned that if there is any significant delay in this particular warning letter remediation, then it could start hurting numbers. Single-digit price erosion is what they expect in the US.
Okay, thank you very much for that. Low expectations and the stock has moved up in today's trade. But let's move on to PNB. It's a howler in terms of Q4. Brokerages too are troubled with the company bank's performance. Abhishek joins in with more. Abhishek, downgrades?
Well, Rima, there have been various downgrades for PNB from brokerages side. But apart from that, the first point to highlight is that they have reported an operational loss for the first time in their history. If you look at the slippages of 31,000 odd crores, even if you remove the one-off with respect to the cases under restructured book or the fraud related or the divergence of 2,200 crore, the other slippages net of all this is at 10,900 crore plus, and that compares to about 3,200 crore. A data trivia is that the slippages of this quarter is higher than the market cap. So gross NPA in absolute value has increased by more than 50%, while in percentage wise gross NPA ratio is at 18.4 when compared to about 12.1 in the previous quarter. Now, some of the key data that PNB throwed up can put it under the prompt corrective action of RBI. For example, the total capital adequacy ratio is at 9.2% with CET1 ratio at less than 6%. As per RBI threshold, if capital adequacy ratio falls under 7.75 to 10.25, that can invoke an PCA. Apart from that, the net NPA ratio is now above 11%. That also qualifies for, putting the bank under PCA. The requirement of provisions for the next 3-4 quarters is 10,000 crore plus due to NCLT provisions, gratuity, fraud related and mark-to-market loss. And not to forget, the aging of NPAs can also lead to higher provisions. So analysts are telling me that, FY19 could also result in a net loss for the bank. Brokerages like Nomura and Motilal Oswal have reduced their target price to 75 or 85 from above 120 plus. Back to you.
Okay. Thank you, Abhishek, for that. On your screen were visuals of JDS holding a press conference. Remember, the hung assembly in Karnataka has put the spotlight on JDS. They could be the kingmaker. Let's see what twist Karnataka politics take. But as of now, occupying center stage, that is Kumaraswamy of JDS. We'll cut across once he starts speaking. But in the meanwhile, let's go across to Sonal. Indiabulls Real Estate, buoyed by the buyback?
Yes, absolutely, Rima. In fact, Nigel was reminding me in the morning how they did a buyback 1 year back, and also the average price then was around 80 rupees. I was going through his note where he also mentioned that the promoters, they did not participate in the buyback, and just after closing the buyback, within 1 week, they actually announced the corporate restructuring where they demerged their businesses. But talking about right now, actually, the total equity in their books is around 7,779 crore rupees. The cash and bank balance is around 1,793 crore rupees. So based on shareholders' approval, they can buy back around 1,769 crore rupees, and based on board's approval, they can buy back around 707 crore rupees. Now remember, the net debt in the books of the company as on 31st March is at around 3,400 crore rupees. They've also sold stake in various commercial properties, fetching them around 4,750 crores for the Mumbai property and around 285 crore rupees from the stake sale in the Chennai property. So they have quite a lot of amount of cash in their books, but let's see whether the promoters will participate, and the buyback price, that is one other important point that we'll be focusing on, and we'll wait for the board meet to end.
Okay, all right. Thanks so much for that, Sonal. Well, Suzlon as well has been a stock that's buzzing around. It's up in today's trading session after the management shared their debt reduction plans. Earlier today, we spoke to the group CEO. In fact, he said that the company will reduce debt by around 40 to around 50% before the end of this fiscal. Let's listen in.
Leaving aside FCCB, our net debt today stands at around 6,400 crores on this. And we have a plan. This is, first of all, it's a manageable level. It's not a significantly high level, 6,400, after we reduced debt recently significantly. But at the same time, having said that, we are now in the process of looking at various options to reduce this debt substantially during this financial year, including monetizing some of our assets. You would see us, before we end this financial year of FY19, our debt coming down substantially. FCCB, today we already retired. The conversion has happened up to 70%. What is left out is only $172 million on this, and which is due for conversion before FY20.
All right, then keep an eye on a couple of stocks. HEG has been a stock that's been buzzing in the last 1 year or so, but just take a look at what's happened in this year. HEG is up nearly around 50% approximately, while you have RSWM. That stock, in fact, is lower by close to around 25%. But in today's trading session, if you pull up the intraday chart, you'll have HEG that's moved to the high point of the day. That's been a multi-bagger, and today as well, it's up nearly around 6.5%, making fresh all-time highs. So let's pull up the intraday chart of that one. And RSWM as well, that is buzzing a tad bit. Why are we finding some kind of relation between both these two stocks? You pull up the other stock as well, RSWM. That's because, in fact, the current market cap of RSWM is around 650, 680 crores approximately. And if you take a look at that 2.5% stake in HEG, that just a year or so ago was valued at a few, 50 crores odd. Now suddenly, in fact, that is valued at nearly around 340 crores. You'll have to take into account a holding company discount. But that could be one reason why a stock that's been a big underperformer is suddenly buzzing in today's trading session. But let's move on then. Cipla is the other stock we're looking at. Ekta, what's the news there?
Well, there's no specific news which is taking place on Cipla. I have made a couple of calls. Probably the only thing that we need to watch out for is that the numbers come out on the 22nd of May, which is next week, and the street will be watching out very closely with regards to what happens on the margins. Remember that the margins had improved to around 19%, but whether they sustain at 19% will be seen. Also, any sort of incremental update on their Indore facility, which had been inspected by the US FDA in the month of April. They had received 3 observations for that. There was no data integrity or repeat observations on that, but any sort of incremental update on that will be something that the street will watch quite closely. For the Goa plant, they have started receiving approvals from that particular plant after the inspection that had taken place in Jan.
Okay, thank you very much for that. Moving on to Karnataka Bank, strong balance sheet growth drove an operating profit in Q4, but the divergence caused a deterioration in asset quality. We'll come back to Karnataka Bank in just a bit, but let's cut across to see the translation of that from Kannada to English. But statements coming in from Kumaraswamy, who is the Chief Ministerial candidate from JDS. Let's move on and back to tracking individual stocks. Sonal, you're looking at MRPL?
Well, weak set of numbers, Reema. That's why the stock is down in trade today. The EBITDA that came in lower by 40% at 1,044 crores. Motilal was estimating EBITDA of around 750 crores. It is better than their estimates, but still lower. The forex loss they reported this quarter was around 150 crore versus a forex gain of 190 crores sequentially. The profits, they also came in lower by 44%, despite the fact that the other income grew by 282% sequentially and 106% on a YOY basis. The GRMs that they reported stood at $7.9 per barrel. Motilal was estimating GRMs of around $5.2 per barrel, but still, if we see sequentially and on a YOY basis, the GRMs have gone down, and that's why the street is not liking that.
Okay, all right, let's wind this down then. We have Abhishek who's joining in. He's going to tell us about Syndicate Bank. Abhishek.
Well, Nigel, Syndicate Bank reported a weak set of numbers. Now, slippages increased to 6,600 crore. That compares to about 2,300 crore in the previous quarter. So their annualized credit cost, that is provision for NPA divided by advances ratio, increased to 6.7% when compared to 3.6% in the previous quarter. Bank reported a gross NPA divergence of close to 2,340 crore, and that formed about 1.2% of their then loan book. So in overall absolute value, gross NPA increased by 22%, while gross NPA ratio increased to 11.5 versus 9.6% sequentially. Therefore, the net loss widened to about 2,200 crore versus 870 crore quarter on quarter. Back to you.
Okay, all right, Abhishek, thanks so much for that. Keep your eye out on the screen. Sonia just sent us an alert that Jet Airways now has halved just in the last 5 months odd. Remember, in January, the stock was at around 880 rupees odd. Currently, it's at around 440 rupees. A few factors are playing out there. Crude prices, yes, they're spiked. We have a weaker Indian rupee as well. So going ahead, there should be some pressure as well in terms of their numbers. And keep in mind, Interglobe, that's supposed to be the best in this space, that didn't deliver a good set of numbers. So yes, we saw some selling on Interglobe on that particular trading session in reaction to its numbers. But ahead of Jet Airways numbers, the stock is already halved. Today, in fact, it's seeing a bit of a bounce. But otherwise, from around 880 rupees in January, I think Jan 5th, 2018. From there, the last 6-month chart will tell you the picture. The stock has seen a sharp correction. Let's pull up the last 6-month chart. That should give you
very contrasting performance by both SpiceJet and Interglobe Aviation this quarter. So let's see what Jet delivers, because Interglobe Aviation reported a decline in yields of 5.5%, whereas SpiceJet had reported a 5% increase in yields. So all the macro factors apart, there was a divergence in performance. So let's see what Jet Airways delivers this time in terms of the yields. Reliance Communication is now a 10 rupee stock as we speak, a 70% fall since the start of the year. The NCLT has admitted an insolvency plea against the company by Ericsson. Nitin Soni of Fitch Ratings joins us on the phone line. Nitin, what are the implications of this particular development for Reliance Communication in terms of banks as well as shareholders and the way forward as you see it?
Yeah, thanks for having me on the show. So first of all, Fitch does not have any rating on Reliance Communications. They withdrew ratings last year after the default. So basically, Arcom was in the process of selling some of its assets to Jio, including the tower, fiber, and other infrastructure assets. So in my view, that will get delayed because now all the lenders will have to agree, even the creditors will have to agree for any sale of assets. Arcom, I think, will likely appeal in the appellate tribunal, and after the response by the appellate tribunal, it will be in the interest of lenders if they try to sell these assets as soon as possible so that they can get some money back.
Okay, all right, Nitin, thanks so much for stopping by and, in fact, giving us those details. The stock, in fact, by the way, moved into single digits as well just a short while back, so we'll keep an eye out on that stock. Well, keep an eye out on the markets, actually. We're seeing a bit of a recovery. The mid-cap index is on the verge of moving into the